Hello everyone, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Tech Markets. It is PMI day and the markets have already started in fairly choppy mood because of it. PMI's first trading day of the month, and it generally does tend to you do tend to find that you get a fair amount of volatility, and certainly in the European stock market, which had been forecast to be sharply lower, actually is now trading higher. And that is coming on the back of these PMIs that have come out early in the European session. Now, we've had a slight turnaround on the dollar in the last couple of days, which is interesting, but it's more of a consolidation, I think, at the moment, and it'll be interesting because when I talk through some of these forex pairs, I think you'll find that there is some overhead resistance coming in, and they could well be some nice opportunities to trade these pairs today. Now, what we've got today is, as I said, the PMI data. And that comes out throughout the morning through the for the Eurozone. We've already had the Chinese and the Japanese data out overnight, both remaining fairly weak though. The HSBC Chinese data was 49.6, so slightly in contraction still, and the official Chinese data coming in at 50.1, so not a great deal there. Also the Japanese data fell to 50.3. Not only that, you had the Tankan survey in Japan, which suggested that the survey was lower than expected at plus 12. So that pretty much fed into a lower Asian session, which saw markets falling, and that came on the back of a lower Wall Street session as well. But we have now had the Eurozone PMIs coming out, and they've pretty much been fairly supportive actually of this of the Eurozone recovery. That is very slow, but still seems to be just slightly going now. Germany, for example, picking up slightly better than expected on the PMI. Even France as well. Italian PMIs were beating estimates at an 11-month high. Spain's slight miss on the Spanish data, but still it's rising at the fastest level for 8 years now in Spain. And the Eurozone data also came in slightly above the flash PMI. Eurozone coming in at 52.2 for the composite. Now, what we've got today is the UK PMI coming out in a few minutes. Expected to come in at 54.3, so very slightly higher than last month, and it shows this continued rebound. Anything above that 54.3 would be positive for sterling, you'd imagine, positive also for equities potentially as well. But the main focus of today, I think, is going to come in the afternoon when we have the US ISM data. ISM manufacturing expected to show a decline of 50 to 52.5, and that would be a fifth straight monthly decline on that. That would suggest that I think anything that comes in, say for example, if it came in above 52.9, that would be considered, I think, fairly dollar strong, because we've had this obviously decline in the recent months, and that would show the potential for the beginning of a turnaround in that trend, and markets and also the Fed are certainly looking out for growth figures to start coming through, and the PMI is a direct feed into growth. So that would suggest that growth is beginning to stabilise, having been on a bit of a corrective tack in recent months in the States. And then this afternoon also we've got the oil stocks, the weekly oil inventories coming out at 330. That is expected to again be above zero at 4.2 million barrels. So that continues to remain adding to the inventories in the States. So that pretty much takes me to my chart of the day, which is the Aussie. Now, I think the Aussie is a very interesting chart at the moment, because although what we've got is a decline over the past few days. In fact, I should start off with the daily. Here we've got 5 days of pretty negative candles in a row now. Interesting that low yesterday came bang on 75.88, which was the low that we saw on the 18th. And 75.88 was the low yesterday. You can certainly argue that the momentum indicators are negative, and also, I mean, the stochastics falling away, RSI and also MACD lines are in decline as well. So that would suggest there is still further downside potential in this move. But and I say but because we've got a slight bullish divergence here coming on with the lows that we saw yesterday not being confirmed on the momentum indicators, both MACD lines and RSI. Little bit of a bullish divergence, and also the stochastics as well on the hourly. Interestingly enough, that's just slight amount of slowing momentum, but I think that move only really gets confirmed if we saw a break above that 76.65 level, which we peaked out at yesterday. At the moment, we're not seeing that. We're not seeing that. Just slightly underneath that as a resistance, interestingly, and it's just falling away again. So at the moment, I think we're still in negative outlook on this Aussie, but that bullish divergence just gives you the slight indication that perhaps there is something there in a rally. But certainly at the moment, the negative on the daily chart is putting pressure on these key supports. And if you saw a breakdown of that 75.58 level, you're then got to go all the way back to 2009 for where we were back then, and that is a considerable breakdown. Levels that not seen since 2009. We're looking at this, certainly the initial one at 74.50, and then probably that reaction high that we saw back around 72.65. So, but to be honest, there's not a great deal of support back from 2009, so it could go quite a long way to the downside as this sort of continuation of this bearish outlook. Anyway, I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.